OK，现在4点半，哎，OK，现在已经4点半了，我们开始我们今天的直播。Hi everyone, good afternoon. Welcome to DA International Live Room. With all the market ups and downs caused by the recent U.S. tariff politics, how can we turn these policy risks into turning opportunities? Today, we've invited David Wang, our star turning mentor and CNE Group's certified instructor with years of experience in global derivative markets. His experience at installing policy changes into winning strategies that helps innovators reduce risks and boost profits. In the next 1 hour, he will break down the three key areas for you: sporty market uh, sporty market turnings, hands-on training tools, smart options strategies, all to help you grab opportunities in this violent market. Now let's welcome David.
Hi, everyone. And let me test. Okay.
Hello, David.
Yeah. The voice is okay.
王老
Hello.
师听不见你的声音。
声音 OK 吗？OK 吗？声音
OK，
听得到吗
听得
？OK。
到，OK。
对，好，OK。好，声音影像都正常哈。好，那我们开始今天的课程啊。Okay. Good afternoon, fellow investors. Today's seminar focus on event-driven trading strategies, with a particular emphasis on the application of futures and options and the heightened market volatilities observed from late March to early April this year. It's my honor to represent CME Group and share with you a series of practical and executable strategies, okay, designed to help investors enhance their adaptability to improve risk management in this crazy market. Okay, so today we'll talk about the trading under the new U.S. tariff policy, insight from event-driven trading and option theory. And we will focus on event drive and option, okay? Okay, that's today's course outline. We will talk about some the latest trend analysis, especially under the President Trump, the tariff. And I think the development and CME Group in develop a digital trading platform major in the economic events in the U.S. market and the global impact of tariff policies promoted by President Trump. Okay, so CME, we create an official website simulator trading demonstration, and especially the number 4, CME create a platform to detect the economic event volatility to forecast. This platform is very important. Then we will introduce to you. And the number 5, we're talking about the event-driven, the theory, and how to practical. And number 6 and 7, we're talking about the impact, okay, and how to design an option strategies under this economic insane, create the crazy market, okay? So let's start. Okay, let's start. Okay, my name is David Wang Youmin, and I'm working for CME for last maybe 7 or 8 years. And I also had a board position in both in Taiwan securities industry and the US broker firms. My professional focus has long been on the training and application of derivative financial instrument and IPO underwriter business. And this is my accountant firm in United accountant firm in Taiwan, and I have a security consulting company. Okay. So the tariff war economic impact, I think that's very big issue, okay? Especially in the end of March to the earlier in April. So US President Trump, the trade strategy especially has ever shift tariff invention, had a profound impact on the global supply chain. The frequent increase and the subsequent reductions of tariff to a lot of countries, right? Such as Mexico, Vietnam, Canada, create a significant uncertainty for companies when evaluation investment decisions and their production site locations. So you can imagine if you are a GM or you are a chairman, in the target on the policy is not unstable. Okay, you can understand what the President Trump thinking. So it's hard to make your decision, right? So why Trump confuse all the market? Because he like to bargain. Trump is a businessman, right? He is like to bargain. He like to he don't show you he is not someone to bet to casino, okay, to show you how, show you why. No, he let you know, understand. You don't understand what he's thinking. So that's he can bargain. He raise your tariff rate and reduce your tariff rate. So you're confusing. So all the boss now the difficult way to make a decision is where is my location? Okay, my facility, my pioneer, the equipment. Where is the location? Vietnam, Mexico, Canada. No, no, no. It's not wrong. It's not. It's wrong. Okay, please locate in U.S. now, in United States. So White House has repeatedly cited the rapid and the large-scale investment by tech giants such as Apple and TSMC, okay, as concrete event and of the success of tariff policies is attractive capital back to the US. That's Trump why he won, okay? From a macroeconomic standpoint, this approach can be seen as a structural transformation of the global supply chain, shift from globally distributed manufacturing toward US-based integration. By raising tariff, the government sold the companies to relocate the production of high value and the critical compound back to the United States. So that's why I'm saying the policy uncertainty give Trump a lot of bargain bet. So he don't want to let you know, okay? Despite high domestic labor costs, the U.S. government aimed to rebuild manufacturing competitiveness through tariff uncertainty. The policy encouraged companies to localize the production of high-cost component. Okay, so in contrast, industry with shorter supply chain and the long supply chain were the different. Okay, so if high tech, the supply chain is so long, maybe 10,000 parts can assemble a goods, but you will imagine if too many parts, too many variety. Okay, so that's what I'm talking about in the contrast. Maybe if you want to invest in the last 3 or 4 years, maybe the short supply chain is a good choice. Okay, the less elastic domestic demand, such as food processing, are relative insuitable from trade frictions and are often used as bargaining chip in trade negotiation. Okay. So I think that this slide will show us the 5 target. Okay, Trump in the past 4 years, maybe he want to the policy flexible. Now some of court will sue him, right? So that's Trump. You are illegal. But I think the president has enough right, enough power to decide the decision. Okay, the directions and the trade balance. The president talking about lots of times to prevent excessive trade deflect and implement countervailing measures. Okay, so I think trade balance is quite important, and the job creation, especially his vote. Who vote Trump? Lots of vote, lots of blue men, right? The workers. So I think he should be job creation, and the trade reciprocity. Okay, establish fair rules for import and export to safeguard U.S. interest. And the inflation control, I think that he even fight in conflict with the federal the chairman. So I think Trump's economic policy want to create a trinity to care each parts of votes. Okay, so I think that his target. And when we invest, we should combine with U.S. president, what he's thinking and what we doing. Okay. So identify affect industry and decline the investment willingness and shift toward US-based investment, supply chain reorganization. I think that this 4 way is when we think when we invest. No matter how US security market or Taiwan or Hong Kong, even Japan, okay, this doesn't matter. You should combine with the policy. The public policy in US is very quite important to us. So as the lots of industry, I suggest maybe US food industry is a safe choice. Okay, so this in contrast is quite stable. Okay, everybody should needs food, and the strong stock performance from this March from now on and to June, the food industry is keep quite stable. Okay, and defensive the characteristic. So I think the AI maybe flexion, right? Up and down, advance and decline. So it's hard to catch. But food is maybe quiet. Yeah, maybe the wave is smooth. So maybe you can think about the food industry. So lots of choice. Okay, so I think the tariff will impact economic quite different ways, especially the longer supply chains. So maybe especially the US and China, when they bargain or negotiate, always focus on concentrate on the food, right? Wheel, okay, corn, beans, okay, that is the concentrate the topic between US president and the Chinese president. Okay, so therefore, in identifying approach sector, the applying suitable options strategies is critical. Okay, Defensive sectors such as food processing provide stable investment opportunities. Whereas tech-oriented, indeed like Nasdaq, are well suitable for volatility-based option strategies. So let's introduce the CME homepage, and I would like to invite everyone to join in CME group. Okay, here is a little man in the screen, the red arrow. Okay, you can see the little man. Please register your account and join CME group, and you can catch a lot of information from CME. It's like the topic we call it economic volatility calculator. Okay, so if you registered, no matter how you use your notebook or your mobile phone, you can see this is mobile phone layout. Okay, CME group, and can see the lots of market data, and please register it here. Okay, to use your email, and here's our I work for education team. This is a trading simulator. Today we'll introduce a little function in the trading simulator, and you can go through some practice, use the simulator platform, because option is quite complex. Okay, maybe you have a lot of thinking, a lot of position, but option is quite complex. So today I would introduce some easier strategy to you, and you can think about how to use these strategies to first of all, you can practice on the simulator, but if you are a senior trader, maybe you can try a real world. Okay, yeah. So so here is the CME homepage. You can find the market data, service, and education. Okay, I offer this, and I use the education platform to train the fellow investors using the trading simulator. Okay, so today's course, you can practice and the simulator on this. Okay, we will help investor become proficient in futures and options trading strategies. The CME exchange, okay, this online simulator platform, okay, so just use it. And the system replied real market pricing and interface design. Also, you can find the trading view. Okay, this is it's quite famous, right? Everybody use TradingView to do some technical or mechanical trade on this. There's a lot of signal on TradingView, so this is so popular. And CME is sign a contract to join with the to use the TradingView platform to show how the technical analysis. So it's very popular. So no matter how you use any platform, okay, the TradingView, the platform I think is very famous for everyone. Okay, and users are granted the features initial capital, such here. Okay, you can get 100,000 US dollar to freely contract futures and options position. Okay, you can join futures and options, and this hand-on experience enhance your ability to manage risk and adjust the strategy effectively. Okay, so you can see the practice account. Okay, take the 100,000 and the practice account here. There's two choice. One is futures and the options. And the practice account, you can see, you can find the equity index, energy, metal, FX, foreign exchange, interest rate, agriculture, micro, and the cryptocurrency. a lot of things in CME Group. Okay, CME Group is the largest exchange in the world. So that's very famous commodity like S&P 500, okay, Nasdaq 100, Russell 2000, Dow Jones, mid cap, Nikkei. Okay, you see Nikkei, the Japanese index. So within the simulator interface, a user can predict order placement and monitor real-time simulate executive result closely, very, very closely. Okay, the actual trading operation. And the Nikkei, okay, Nikkei is very the new commodity in CME. Okay, we support a broad range. Okay, you can using the Nikkei. So the earth is allow Japanese investor to hedge overnight explosive. So if the in Japan now is night time, but if the in US has is quite insane the market, so you can open an account in DA International, and you can trade Nikkei in CME Group. Okay, you can trade Nikkei not only in Japanese security exchange, but also in CME Group. Okay, so you can take the risk, hedge the risk in Japan's nighttime. So that's very important to you. Okay, and then this platform is the simulator to use the futures. Okay, so we can submit order and you will confirm order. And if you earn some money, okay, the balance will show you. And the option also has you can trade the simulator including both futures and options module over covering major global contracts such as the Nikkei 22. Okay, and if you want to practice the options model, okay, here is okay. I show you the options platform, call put, okay, and strike. So it's very convenient to you to practice. So this class is not only a theory, but also you can practice in the real world. And in other platform in CME Group, please search the event. Okay, use the you can search the event. Event means today's our theory, the basic theory, event driven. Okay, then you can use the event driven to see the economic event analyzer. Okay, the event volatility calculator is very helpful. I will show you that it's very quite helpful. It's like the equity. You can see today is June 3rd, right? But you can see, please see the list. It's June 6th and June 9th, June 10th, and June 11th. So, well, what will happen? What will happen? We give you a list. Then you can wondering, maybe this Friday has quite a lot of volatility. So you want to catch the wave from futures, or you want to catch the direction from options. The economic event calculation can give you a lot of trading ideas. The CME has developed this event forecasting platform, allowing investor to monitoring upcoming events. Okay, such as you can see the equity like Russell, okay, Nasdaq or S&P. Okay, you can use this platform to forecast what will be happen. the volatility will be higher or lower. And for foreign exchange, okay, we show you the core inflation in June 11th. So lots of list to helping you. Metals, okay, gold, silver, copper, okay, what will be happen? And interest rate. Interest rate is very important. Bond, okay, T-note, what will be happen? They will be increasing the rate or not. Okay, so what will be happen? Not today, but the futures. Okay. And the energy, OPEC, the crude oil, maybe the supply was higher, is getting more or getting less. So the event driven trading should be noticed on the economic forecasting. So this list is very helpful, very helpful. Okay, like agriculture. So each part of commodity, you can find an event to reflect interactive which commodity will higher or lower. So if you research the American financial security market, you may find the event is quite important, more than quantitative analysis. Lots of traders like to use quantitative, use technical analysis. But actually in America, in US, most of the trade trend based on the event driven. So there's a lot of paper to research about the news. It's like this one, the significant corporate news will influence the market price will getting higher or lower. Sometimes more than 20%. Okay, this is positive news and this is negative news. So please catch the news and forecast what will be happen use CME Group, the economic platform. So here's a paper. In the past, the Trump 1.0, okay, 1.0, lots of PhD do a lot of research to think about the effect of Trump's trade war on US financial market. It's very interesting. You can see the Trump can let the market price down or like the market price. But why he can? Because Trump has power, right? He has power to do so. Okay, so we can join with him. If we want to make money, okay, we should join with him. Okay, to think what he think. Okay, to do what he want. Okay, so that's his event driver. You should select an event and define the event window. Specify the analysis period, include the days before and after the event occurred. Okay, and calculate the normal returns, and calculate the abnormal returns and statistical, the testing. So I think the event driven, when the president is Trump, is very effective. So I give you some example. This one is US president announced increase in oil production. You see the oil price is from the 79 and reduced even more to even less than to 55. And now it's per gallon only 62 for a long way, because US is from the importer to the exporter. So how Trump control the inflation? Digging, okay? Dig the oil. More oil less inflation. Yeah, that's economic. More supply, less demand, the price will getting low. So I think the 3 years later, these 3 years, maybe the oil's price will getting stable in a very small waves. Okay, so the crude, the oil, is a good strategy to us because he don't wave. The oil price don't wave. So I will teach you some option strategies to catch the oil's price. Okay, and then the natural gas. Natural gas is quite inflation. Okay, you see the UK even more, lots of persons because the natural gas is too expensive. So the electrical power and the natural gas to heat in the winter, but it's too expensive. So lots of UK the people cannot pay off this expensive energy. So why? Because Russia and Ukraine wars affected the natural gas market. So keeping up and down, up and down. Okay, and the tariff war will ever put down to the 2.5, 2.9, but now still rising to 3.7. But if Russia and Ukraine, the war will getting peace, maybe the price will getting lower. Okay, so my suggest, don't chase the bull side. I'm waiting for the bear side. I hope the war will getting end. Okay, I think you may same as me. My opinion. I don't like war. We don't like war. Okay. So and this is Russell 2000. The Russell 2000 and the cryptocurrency market is a high correlation. Okay, so you see the index, if lower, means the Bitcoin was getting cheaper, and the Bitcoin getting higher, and the Russell will getting big, but getting bull. Okay, so Russell is worth to understand and worth to chasing this market price. It's good to, it's very good to you, because if you like to trade futures, you see the 2,300 point for the index, but each night maybe 1 or 5, less than is 1%, and higher than maybe 5%. The wave, so you can catch the sweet point if you like to day trade. Okay, day trade. I think the Russell 2000 is a good choice. And S&P 500. Okay, now it's getting smooth. Everybody was waiting for the tariff news. Okay, so maybe Trump has next step to change his mind, to change the tariff rate, to bargain with China about the wheel, about the corn, about the soybean, anything. He just want to reduce. He just want to equal the trade. So in event-driven trading, selecting the underlying asset is critical. Yeah, sure. And different asset class exhibit distinct volatility patterns, certain characteristic and sensitivity to macroeconomic data, all of which influence of optimal options strategy to apply. Okay, so this is gold. Okay, the inflation concerns and make the gold price is getting higher and higher. It's really insane, right? It's double to the 2024. So it's really, really insane, the gold price. Okay, so let's talking about the options. Maybe you didn't trade options before, but today I want to show you it's good to us, especially when we are if you are not institution trader, options very good to you. You think the trend may be getting bull, maybe getting bear, maybe just like up and down, up and down. It's hard to catch. But if you want to earn money, it's a lot of a financial tool. Why you choose options? Because options provide two ways trade. One way is call options, like a bull. One way is put options, like bear. So if you buy a call, or you say you long a call, means you just like buy a ticket. Okay, just buy a ticket. If the market is real reaction is bull market, then you can make lots of money. But if you buy the wrong way, you just lose a little ticket cost. So why you have to know what is options? And if you buy the put options, okay, you may imagine the financial market will getting bear. So you buy a put options. And the put options, if the market getting bear, and you will make lots of money. But if not, you only lose a little ticket cost. So just trying, okay, just trying. Okay, the key factor in options is the five things. 1, expiration date. 2, relevance. 3, positive or negative. 4, cost and benefit. 5, the probability statistic. So all you have to learn is 5 things. You may imagine the market will getting higher or lower. But if you use futures, or you use securities, or use the financial tool is options, the result is quite different. Okay, in practical trading, options and strategies should be dynamical adjustment based on market volatility. When large price swing are expected, but the direction is unclear. Okay, so option giving us a way to catch the both side. You can buy a bull, but also in the same time you can buy a bear. That's options provide us a good strategies to face on the. It's not clear, right? No one can forecast the futures 100%. It's different. It's impossible. So the options give you us a strategy. You can buy a bull, and the same you can buy a bear. So no matter how the wave to the bear or to bull, you can make money, because if you the bear make money and the bull you lose, it's just a ticket cost. Okay, so you can see the graphic. Okay, the yellow line means the cost, just a little, and make money is unlimited. So if the bull way, your calculus is 5%. But the market is insane. It's not 5%, it's 10%. Wow, you will make more money. So we call it long position, call it buy call. Okay, for example, the S&P index, okay, now it's 5,900, maybe getting rising to 6,100. Who knows? Okay, so you can make more money. That is long spread. What is long spread? You will buy a bull, but also sell another strike bull. So we call it a buy side, and a sell side. That a long spread. Long spread, you can see the graphic. The cost will getting less, but your benefit will getting stable, will not change, no matter the pricing, the index getting true to another in a crazy price, but your benefit is stable. But stable is good things. You see, people will insane or going crazy, emotional to trade. But options give us a rational to be a rational trader. Okay, so spread is good things. Okay, and this is short position. You can buy the put, buy a bear, and this is short spread. Also, you can buy a bear strike and also can sell another bear strike to and the graphic will getting rational. Before you get into this market, you already know what the cost and what the benefit. You already know, so you can keep rational. You see, okay, I know the worst is 100 US dollar, okay, and the most benefit is 400 US dollar, and the benefit will is more and the cost is less. So I can keep rational, don't emotional. Listening Mr. Trump and looking for your own position. And this way is what I say is straddle. Okay, you can buy a bull and you can buy a bear. So you don't care. Okay, you even don't. You should not forecast the market getting higher or lower, getting bull or bear. That's okay. If big inflation, if big volatility, you can make money. Okay, right side or left side, that's okay. And this is I like this one. Okay, this strategy is the quite peace, quite neutral. Okay, you buy a bull and sell another strikes bull. You buy a bear and you sell it next step, the next strike, the bear. So the graphic will getting peace. Okay, getting neutral. You don't have to forecast that the price will getting higher or lower. The cost is so low, just a little less cost, but high opportunity to make money. Okay, right side or left side. Okay. Keep ratio. So I suggest if you are a junior investor, you should practice like this graphic. Buy call, sell call, buy put, sell put. 4 position in the same time. Okay, to trade the 4 position in the same time. And another way, you buy, say, and in the contrast is say, buy, we're getting like this. Okay, then this graphics should be when the market is less volatility, as like as crude, as like as oil. Now you can observe, in my observation, the oil's price is getting lower volatility. So I can use these strategies to make money. Okay, now this is the pricing table. You can find this is mini S&P 500. Now it's today's index market is 5,900. And golden, okay, per ounce is 3,300 and 88. Well, it's quite expensive, right? And CL means WTI, okay, West Texas, the crude, okay, the oil. Now the per gallon is 62. So using our quick strike tool can make your strategies to practice. Okay, there's lots of thinking. Okay, that we are getting real practice. Okay, like this. The oil today's price is 62, right? So I mean tell you, you can show the straddle. Okay, you can we just like real practice. You can use butterfly or iron condom. So if the wave is so slow, it's so last, so you can buy say the contrast. Okay, say buy. So we sell the 62 and buy the 61.5. Another way, you can sell the 63 or buy the 63.5. That will be getting a straddle. So to the June 13th, if the price stuck, the price never over than 63 and never less than 62, so you will make money. That's the way we call it short iron condom. Okay. So what we earn? We earn the time value. Every price has every strike has time value. Why has time value? Time value means a probability. Okay. To the expiration date. Before the expiration date, everybody has possible. So you should pay for the possibility. So why every strike is pricing? And more near than the index, and the possibility will be getting true. And far from the strike will getting false. So you can see the more expensive nearby the index. So the 62.5 now is 1.39. The price is getting expensive and the price will getting cheap. So it depends on the possibility. Okay, so that's why I'm saying the crude oil, you can use the straddle. We call it short iron condom. Okay, short iron condom. And the gold price is getting rising, right? So if you want to try to trade the golden pricing, expiration day, we can choose the June 13th. Here, okay, here is June 13th. And the US gold price now is 3,388. And if there's two factors maybe will influence the gold price. One is the war between Ukraine and Russia. If they sign contract to getting done, okay, to stop the war, I think the gold price will getting down very quickly, because gold price is most of the gold price, the gold traders think about the inflation and hedge the geopolitical risk. So if these two factors, the war is peace, okay, so the inflation will be getting down. So I personally, I don't like to trade gold getting higher, because the gold, if the gold higher, means more hedge risk, means the war is keeping continue, means more person is dying, right? So I personally, I hope the gold price will getting lower, because we don't like to trade for hedge the geopolitical risk. Okay, so that's the gold price. So, but actually the volatility is still quite insane. So we can try this. Okay, you can buy 3,395 to buy an option, so 3395, and sell for 3405. Buy 3395, sell 305, 3405. So that's why I'm saying buy a call option, the strike, and sell the next strike options. One for buy side, one for sell side. Another way, the 3375, the put options. The right hand is the put options. You are looking for the forecast, the price will getting lower. Okay, so we can buy a 3375 put options. Then you can sell a 3365 put options. Two strike, right? One for buy, one for sell. Then you can make a graphic like this one. Keep rational. You have two costs, one for bull side, one for bear side. But no matter how the market getting lower or getting higher, you can make money. And this is ES. ES means the S&P 500. Yes, S&P is the largest volume to trader. Okay, so you can see every day has contract expiration date. So you can observe. Okay, you can doing some arbitrage to every day. Every day you can day trade for S&P 500, because S&P 100 have no any front risk. There's lots of volume to trade S&P. Okay, so if you want to forecast on June 13 on 2025, also you can buy a call 5,930 and sell another strike for 5,950. Okay, buy 5,930 and sell 5,950 to do a rational spread, long spread. Although you can buy a 5,900 put options and sell a 5,880 put options. One for buy side, one for sell side. One buy side, one sell side. Two different strike. Okay, then you can make a graphic like a rational. So I think that today's I will introduce. Maybe we watch the TV, catch the news every day. But if you can transfer the news to a trading idea, and then you use your trading idea to trade options, will be safe, high probability to make money. If you lose, it's a fixed cost, and if you make money, you can get if you have any idea, but you can trading both sides. Okay, two ways you can make money. Okay, so the event driven theory can use lots of way to do. I think the CME group, we provide lots of information and source to you. We hope our investor use our platform and help you to control your risk and more communicate with DA. Okay, I think DA International is a good security company. So more class, more education, and more make money. Okay, hope you enjoyed today's class. Okay, my class is here. Thank you.
Thanks, David. Time for Q&A. I see a question from a viewer here asking,
Okay.
Hi, Master, how to determine when to use the buy stranger or short stranger?
Okay, there's two questions, right? Yeah. Okay. Determine when to use the buy shadow or short shadow strategy. So that's why I say, okay, the like oil, please, oil, short shadow. Okay. If you want to buy shadow, means the news will insane. Okay, make the market crazy. So maybe the gold or Russell 2000 has more opportunity. So I think the different commodity have different characteristic. Okay, so just use different strategies on different commodity. Yeah, that's my answer. And number two. Yeah, can I use the IV implied volatility? Okay, IV means I will implied volatility of options to determine if the market is too high or too low. For example, if the IV is at historical high, S&P options is at 40% IV, it is one of the signal to show market is too high. In fact, I don't think so, because the market is quite intelligent, quite smart. You think that we means the crowd intelligence. Crowd intelligence means they are rational. They are rational. They know something will happen. Okay. So maybe it's not a good way to catch the implied volatility, the premium. No, don't think about that. If the premium is getting higher, means something will happen. Okay, so if the premium is getting higher, why don't you getting a spread? Right? Your buy side will getting higher and your sell side will getting higher. And the buy side equal to the sell side, then your cost will fixed. So I think that would be rational strategies to do. And another question I see, in futures trading, there are pair trade strategies. Good question. I like pair strategies. Like buy S&P, show Russell 2000. Are there similar strategies in options trading? Good question. You are my good audience. I like this. I like to do long spread to S&P 500 and short spread to Nasdaq or Russell 2000. Yes, I like this. I like this so much. I like the two-way pair trades very much. Not only in Russell and S&P. In fact, I like to use the gold and silver or the Europe and GBP. Okay, Great British Pound. I like the two ways because pair trades in the futures, sometimes the risk is hard to control, but in options, the spread, I can design the more efficiency strategy to the two-way pair trade. So I like pair trade. Thanks for your question. And in fact, that's you are my good mindset with mine. Okay, thank you.
Thanks, David. Okay, so it's the end of our live stream. You can watch the replay on our YouTube, and we will see you next time. Thanks all. Thanks, David. Thank you.
Okay, see you. Bye.
Bye.